Hello and welcome everyone to this morning's Daily Market Report brought to you on behalf of CommunityFT for all CommunityFT members, in which we are going to take a look from the point of view of technical analysis at some major asset classes, okay? But before we do that, at this point, folks, let us all embrace a quick risk warning. So let's familiarize ourselves with the information in front, engage as much as is possible, so that hereafter any decisions that we make in our trading are of a fully informed nature, folks, okay? So on the cards for us today, let's take a look at some economies. The value of those economies as is reflected by the value of their currency. Let's also take a look then at some commodities. Okay, so let's move to the platform, guys, and what we're looking at now is the daily chart, okay, for approximately 2 years of euro versus sterling. Now, the first thing we witness, okay, is the strengthening of sterling versus the euro over the last given period of time and the weakening of euro simultaneous with that. More recently, okay, we have support and resistance levels well established in the market, okay, and we have some key areas of support around 0.659 and resistance then around 0.742. So that really is just to say that the market has been ranging between those two areas over the last given period of time. What's of interest to us, though, and especially from the point of view of this analysis, is how we can find where those movements are likely to end. In other words, where the market is going to change its behavior and move to the upside or downside. So let's talk about certain indicators we can use to help us with that. What we can use is the 55-day exponential moving average. The 55-day exponential moving average can help us look for opportunities whereby if the market breaks the support or resistance that's served by that, we can look for opportunities based on where it breaks to the upside or downside. The MACD to a longer term, okay, can help us find certain opportunities furthermore therein. And the stochastic oscillator itself can help us by showing some overbought or oversold levels. But that's another great way actually to hedge positions, because suppose we have a losing trade, the stochastic can actually help us catch the hedge position of that, or the opposite trade itself. Now let's take a look at palladium. And in front of us we're looking at the daily chart of palladium, okay? So what we see here, and I'm just going to pose this to you all, okay? Is there anything noticeable about palladium? Anything noticeable, okay? Palladium, historically, guys, as you can see here, is a market with terrific trending, okay? It trends very, very nicely, okay? And if one has a sufficient indicator with which they can identify when those trends are likely to begin, well, that presents many, many opportunities. So the opportunities we could look for here with regard to palladium is using the 100-day exponential moving average for support and resistance, okay? So if the market breaches from top to bottom the 100-day, looking for possible short opportunities. If it breaches it from the upside, looking for possible long opportunities. The commodity channel index can also help us with that, in that if it reaches back in or starts to range again, that can be a sign of where the price is going. But all of these factors have but one thing in common, okay? With regard to finding those movements, as you can see here, and as you've seen historically, they're actually quite lagged. So what we'd like to do is present to you a bit of a solution. And the solution is to have an indicator that doesn't show lagged entries, and that also allows one to add to those winning positions. And to highlight here, there would have been an initial entry here at the very start of that breakout with an exit and a total win of 1700 pips, just over. A second winning position which would have added to our initial with a total win of over 1300 pips. And that's an example that you can see also worked very well historically as well in this market with regard to catching those trends without lag. So we hope that's been of help, guys. If you have any further questions, do not hesitate to get in touch. We welcome all inquiries. Have a terrific day, and as we say here, keep learning.